State Bank of India bids farewell to its chairman Dinesh Kumar Khara, making way for his successor, Mr. CS Setty. He, of course, assumed charge yesterday. Mr. Setty previously served as the managing director of India's largest public sector lender and oversaw risk compliance in retail businesses. The 59-year-old started his career as a probationary officer at SBI in 1988. My colleague Latha caught up with the man himself and began by asking him about his first thoughts and plans as he begins this new experience. Listen in.
It's definitely a big job. I think it's more of a humbling experience that, somebody's trusting you to carry such a large institution. It is not only one institution, it's a conglomerate, as you know, that, we are there everywhere.
Yes.
I'm very thankful to all the stakeholders, particularly the Government of India, to repose faith in me. And I see that it's more of a greater responsibility.
Yeah.
Responsibility both to the institution as well as to the country. We are the proxy to the economy.
Absolutely.
And obviously, I think it's a great humbling experience.
Yes, I think nearly a 40 lakh crore deposit base would make you as large as the Indian budget. So it's no laughing matter. But let me start over there. Deposits is the place where banks are now, kind of racing against one another. Do you think this is going to push up costs even more? Are we at the peak of the deposit rate, or is the war still on?
I think the war is a very strong word to be used, I suppose.
The competition for deposits.
The competition is definitely there. The pent-up demand for credit. Obviously, we have had an excellent run on the deposits, not in the other sense.
I got it.
We had good growth of deposits during the COVID period, right? I think most of the times we compare that growth with the current growth rate, number one. Number two, on the contrary, credit growth was lower in those periods, and now, of course, the credit growth is picked up. So the disparity is there, and this is not the first time that we are having this disparity. Earlier also it was there. What I visualize, or I'm able to see that everybody is thinking that there would be some, monetary movement of interest rates.
Yes.
If you see, much of the concentration of the deposit is happening in the 1 to 3 years buckets, which means the banks are also looking at just tweaking the rates within these buckets.
Yes.
In order to prevent, long-term locking up of the interest rates.
That's right.
So I don't see that the huge rate war is going to happen. The competition will be in a different manner in terms of surveys, in terms of the leveraging the branch network and reaching out to the customers. And also maybe, within this 1 to 3 year bucket, what is that you're going to do?
No, all this is even before the new LCR rules have come. Once the liquidity cover for what they call unstable deposits increases to 15%, then do you think deposit FD rates will go even higher?
No, I think LCR is too early to talk about. Okay. I think we have been taking this stand that is only a discussion paper. Okay. Let us see. I think this discussion paper has several elements. It's in terms of the HQLA modifications. It's in terms of the runoff factors on various deposit categories. So we are engaged with the regulator.
But it is a draft regulation.
It's open for discussion.
Yes.
And I'm sure the regulator would definitely take opinion from all the stakeholders.
Okay.
I think let us not front run on that. I think we still have some time on that.
All right, let me come to the loan side and then ask you about margins. On the asset side, the problem is with unsecured loans. The Reserve Bank has already raised risk weights to cool it down. And we can see it, even your credit cost went up by about 10 basis points, if I'm not mistaken. I think even more, it went up by about 15 basis points. Do you think that there is more to come in terms of credit cost because personal loans, unsecured loans can get, can go delinquent?
No, I think the concerns of the regulator on unsecured lending is highly justified. As we keep saying that, there are unsecured loans and there are unsecured loans of SBI. And the uptick in the slippages, what we have witnessed in the last quarter is seasonal in nature.
Okay.
And one thing is, because the asset quality of retail unsecured personal loan in SBI is gold standard, people do not want to tolerate even 5 basis point, 10 basis point slippages increase. I
think express loan category showed
obviously, that is the only unsecured portfolio we have. All of the rest of the portfolio, except barring a few pension loans, much of that personal segment is, home loan is a very largest, large portfolio what we have. So I'm not really concerned about this.
You don't think, credit cost can go, like above 50 basis or something?
No, it may go up a little, but I don't think it's a matter of concern, either on the asset quality or on the slippages or on the credit costs.
Okay. No, but personal loans are also the ones that you get more money. I mean, it's a high yield.
No, obviously. I think we will continue to focus on that. And our unsecured personal loan is essentially to the salaried class. Okay. Even if there are slippages, there could be temporary slippages, some salary get delayed or something. But otherwise, I think there's no great concern.
I'll tell you the concern of the investor. Your cost of money could go up because, as you say, in the 1 to 3 year bucket, the deposit competition is very hot and doesn't show signs of flagging just yet.
No, but
and the cost of personal loans, you cannot lend too much because it is already showing signs of overheating. So will your margins be under threat? Your 3.2 is deliverable, you think?
3.35 is something
the last number.
Broadly it will remain there.
Okay.
See, if you see our credit growth has been secular across the segments.
Yes.
It's not that it's come from retail personal loan or total loans.
No.
It has come from agriculture, it comes from MSME, it has come from corporate. I think if we are, our product portfolio is so diversified, even if one product is not doing all that well, or we want to go slow for any reason, I think we are able to make up. Okay. And we have had double-digit growth across the segments. And I'm sure, I think that will continue. Okay.
All right, so the rise in credit cost is not a concern and credit growth will continue. That is the word coming in from the new man at the helm of State Bank of India, new chairman.